Everybody is really hyped about Nvidia stock right now. And in today's video, we are going to dive into the 9 vulnerabilities of Nvidia. So what are some weaknesses of Nvidia, the company and the stock right now? And I just want to point those out so that people don't make reckless decisions. This is not investment advice, nothing on the Finxter channel is. Okay, so let's dive right in. The first weakness is there is gigantic competition, and Sam Altman, for example, proposed to investors to build a gigantic AI chip company focusing solely on the production of AI chips. Then we have AMD. AMD is actually, so people underestimate, so if you look at their website, they have lots and lots of AI chip development efforts. They have great AI chips as well. They are always like one generation behind Nvidia for now, but still AMD is a big competitor of Nvidia. Then obviously we have China, so we have many Chinese companies that also want to get a foot into the chip production market. We have some companies already producing chips for Nvidia, like TSMC, not even mentioned here on this slide. We have Google with the Tensor processing unit. We will see it in a moment. Meta, Tesla, Amazon, all the big tech players produce their own or have their own efforts of building AI compute. Why? Because those companies spend billions and billions and billions of dollars every single year on AI compute. For example, Meta is now expected to spend $40 billion just for AI data centers to train their model Llama 3 and so on. Tesla, like the most capital expenditure CapEx is spent on Nvidia for those tech players. They essentially their profit margins they get from advertisement business, or in the case of Tesla, from selling cars and AI application business. This is like their income, but a big portion of their income is spent on capital expenditure for Nvidia chips. And there's a huge incentive to create own AI chips for those companies. As Jeff Bezos said, your margin is my opportunity. And here on the slide, you see the margin of Nvidia, and you see how the margin has exploded in recent years, like north of 40%, I think 50% or more. Okay, so everybody makes AI training chips. We have Nvidia obviously making the Blackwell super chip, which is the newest generation we see at the top. But also we have AMD Instinct MI300X, nice chip that is already better than Nvidia's previous competition, the H100, previous version, H100, but obviously Blackwell still then supersedes the performance of AMD Instinct. So Nvidia is like the OpenAI in the generative AI space, always one step ahead for now. We have Intel releasing Gaudi 3, we have Tesla with the Tesla Dojo training tile, we have Meta with a project called Artemis. So in Meta they call it the Artemis project. It's basically a meta training and inference accelerator, or MTAA. They are already at version 2. We have Alphabet with its TPU version 6, Trillium. They just a couple of days ago they announced this AI chip effort. And we have Amazon with fitting name Trainium 2. Okay, so we have like all the players, they generate AI training chips. So this is like a weakness. And I think you should know, so I have just released this video maybe a week ago called the 10 modes of Nvidia. Modes like competitive advantage. And I'm really bullish about Nvidia's position in the marketplace overall. And we will you can check out the video on the Finxter channel, just search for Finxter Nvidia modes or something on YouTube and you will find it. I will also give a link in the description below. Okay, just for a quick recap here, you can pause the videos I will quickly mention the modes, I think, of Nvidia. They are first to market, they have low cost AI training and inference, they have AI software and hardware leadership, partner networks, tools and ecosystems, they have the built-in software infrastructure CUDA, also network effects around their brand and attention mechanisms. Every research paper mentions the name NVIDIA in it, so NVIDIA has a huge brand advantage. They have a monopoly in creating AI factories, not only chips, but whole factories. And they have a lot of great talent. And they have proven time and again that they are an innovation engine. Their biggest moat, also according to the CEO, is not any of those. It's just that they are the innovation engine, that they are nimble enough to adapt to the changing marketplace. Okay, but still it is a weakness. The competition is still a weakness of Nvidia. The second weakness I want to mention is the stock overvaluation. So I have done some valuation work on Nvidia. I don't think they are significantly overvalued, but I mean, there are some signs, right? I could be wrong. There are some signs like the price to free cash flow. You see here at the bottom, you see the price to free cash flow. So how much cash flow they get in a year and how much you pay for the stock. You would have to wait 87 years if they wouldn't increase their cash flows year after year. You would have to wait 87 years just to get your investment back. So this is kind of could be seen as an expensive company. Obviously, the market expects that the cash flows keep rising. That's why they anticipate future cash flows increasing and the price to free cash flow ratio on the initial investment coming down. But still, there are some signs, right? You should just like maybe on YouTube check out those videos. If you see videos like this, there might be some risk of retail money, dumb money, now going into Nvidia stock. There's some risk. I explicitly mentioned there is some risk, but it's not, to me, I don't think so. I don't think this is the case, but I just want to mention it. So a big warning, we are currently in AI chip hype phase, right? It would be better if you had anticipated this a year or 2 years ago. And actually on Finxter, I mentioned Nvidia multiple times for many years as one of the big future player. And you see here on the, if you check Google Trends and you search for AI chip, you see the massive hype phase we are currently in. It has gradually increased here, but then since January 2022, basically since OpenAI, since the ChatGPT model, we have seen a massive explosion of interest. And now look at this curve. It doesn't actually mean that the red future scenario will happen, right? It doesn't mean that the hype is now over just because we are in a hype phase. For example, here, look at this blue chart, like maybe a year ago. It already looked the same. It looked like a huge hype phase, but then the hype actually doubled and tripled since then, right? So there's still the opportunity that this will go much higher. And the hype actually, in the future, I think the interest for AI chip will significantly explode. So we might see something like the green, just the hype keeps going up. We might see something like the hype coming down a little, cooling off and then going up, or we can see that everything was just a scam. I don't expect that this will be the case. Okay, so just a warning. This is one of the weakness of Nvidia, that it might be overhyped at this point in time. And you can see here the Gartner hype cycle. Many people use this as a reference for why AI might be overhyped. I have my own thoughts on this. You can see like we have in the first phase of the hype cycle, we have the technology trigger, research and development, first generation products, and early adopters investigate. And then we have mass media. Hype begins. Many would say we are like in this phase at the peak of the hype cycle, right? Then you see supplier consolidation and failures, negative press, and venture capital founding stops. And then we kind of fade out here to this slope of enlightenment and plateau of productivity that is much more healthy. So I would say personally that we are more like we already had multiple hype cycles. This oversimplifies this whole problem. If you look at Nvidia and you search for AI winter, you can see that we already have multiple hype cycles in the AI space behind us. Yeah. So this is very interesting. If you look at this hype cycle, we have it behind us. So we might already be in this plateau of productivity where we have high growth adoption, 20 to 30% per year or so. Yeah. So a rise. Actually, it's a 20 to 30% of the potential audience has adopted the innovation. I don't think we might not be here already, but I don't think we are at the plateau as well. This is just an oversimplification. It's just a mental model developed by Gartner. It doesn't mean that it always applies like this. The hype, there already was significant hype around AI, and it never materialized. And now this time it really seems different. It really seems like the AI is generating real world value, and we are close to AGI. And my personal value per share. I will also give you some more evidence of this later in this talk. I know it's about the weaknesses of AI, but I can also don't let these oversimplified arguments just stand there. Now actually we can see huge revenue drivers and unlocks by AIs, basically on the application layers, AI application layers. What are those? Autonomous vehicles, humanoid robots, AI research agents. Each one of those is currently unlocking multi-billions, if not trillions of dollars of markets. And this is real revenue that really manifests, right? There is cash flow. There's cash flow here. There's real cash flow. There are real savings by AI. So this one, we are already behind the major hype cycles. It is not just hot air, right? We have proven that there is something substantial. There is a substantial technological breakthrough. In internet terms, we have already had the 2000 crash, right? The 1999 bubble and 2000 crash for the internet age. And we are currently now we're building the Amazons of the world. Good, and my personal valuation here is based on 4 different outcomes: a failure outcome for Nvidia, pessimistic outcome, realistic, optimistic outcome. Here I have calculated a fair value based on some discounted cash flow. You can check it out. Just search for Nvidia valuation. Finxter Nvidia valuation. I can also give a link in the description below, or you just check out the Nvidia playlist. And this is my personal value per share based on the probabilities I have assigned here. This is not investment advice, obviously. I could be completely wrong. Okay, so next to the next weakness, AI chip money may come from investors, not users. So what does it mean? It means, if you look at the chart here, it means there is significant increase over the last decade in funding of AI-based startups. These are numbers of the funding of AI startups, and you see there are $40 billion of annual funding in 2023. It actually has come down a little, which would maybe weaken this argument. I would say so, but still there is if you look at the big picture, the 10-year context, it has significantly increased, and a lot of money basically that flows into Nvidia is spent by those AI startups, right? The main expense they have is for AI infrastructure, for training and inference. Those AI startups need to train their models, and then they need to host their models or run their models on the servers. And of those money, a large portion goes to Nvidia already. So Nvidia's revenue is real, right? But where does the revenue come? It comes from the startup, from the companies. And those companies, if those companies don't make money, they only attract money from investors, then basically it's investors paying Nvidia indirectly. It is not users paying Nvidia, right? And this would then mean, the logic of this argument is that it is an unhealthy market because it is not sustainable for investors just to lose money, basically. We need to have we need to have a positive sum game. This would be a negative sum game because investors pull in money. The AI startups, they operate at a loss, and they spend the money for Nvidia, and the only company making profit is Nvidia, but they profit off the AI startup investors. And as soon as the investors see there's no revenue coming from their investments, there's no return on investment, they stop providing money to those startups, which means the money flows will stop as well towards Nvidia. And this is definitely a weakness, I would say. The only question is how big of a weakness this is. And for example, there's some fake news that AI is already generating, there are some fake news that the AI bubble is unsustainable, right? You can check it out on Reddit. For example, in the presentation earlier this month, the venture capital firm Sequoia estimated that the AI industry spends 50 billion for Nvidia chips to train advanced AI models, but but brought in only 3 billion in revenues. This is the fake news. The fake news is not that AI is generating revenue. The fake news is this. I don't see any evidence in the market. Actually, if you check it out, the AI is already making billions for companies like Google. You can see in these benchmarks here for over time performance relative to human baseline. 100% is the human level performance. You can see in visual reasoning, in English language, in image classification, in math, in language understanding. They reach or surpass human level performance. So this is real. AI is already generating real value in the marketplace, not only a few billions, but hundreds of billions. For companies, you can see this here in this McKinsey report, you can see that they are already generating hundreds of billions of revenue, and Google revenue and Meta revenue, all of the big tech revenue from advertisement, for example, is already closely interwoven with AI and generative AI. They make revenue because of AI. AI is already a revenue driver. It already drives huge amounts of revenue. So investors are already seeing a positive return on investment. And I don't think that this weakness is severe. I think AI is generating much more value than is destroyed by some startups that have negative margins. Good. The next weakness that is often mentioned is that raw AI compute will get commoditized. And the AI infrastructure is basically a commodity business, right? This is like, I wouldn't say this is 100% sure, but I think it's pretty safe to say that AI infrastructure will become a commodity business. Currently, the demand for AI infrastructure is just so high that Nvidia can get a 50% cross margin on their sales. But the margin compression is real for commodity businesses, right? And we can see that the commoditized. What does it mean? A business commoditized? It means that the cheapest provider gets the compute, right? And you can see that how the AI training costs for hardware is basically dropping exponentially. Yeah, so no, it's not even exponentially. It might be. So because it's a log chart, a straight line log chart means it's a power law, right? This is actually it comes down with a power law. I would say, if I'm not completely mistaken here. Yeah, it's like a 10x on each axis. So yeah, we might have a power law. Good. So it's coming down, right? The cost per compute unit, RCU, you can think of this as a proxy for compute. The cost per compute is coming down as we produce more and more compute. And now you might ask the question, how could Nvidia, for example, win in a commodity market? They are already winning with their strategy. They basically increase the performance per dollar spent. They have more units. So the game plan is to sell more units, to reduce the cost per unit. As you have more units, you have the scale to do so. You can hire the best AI engineers. You can get the best production capabilities and so on. You use Wright's law and you use learning effects and as you reduce the cost per unit, you actually sell more units because now you unlock more application scenarios of people purchasing your AI training compute. And there's a quote: you don't want to be in a commodity business unless you're the biggest, meanest kid on the block and you have the lowest price. And I would say it's pretty clear at this point that Nvidia is the largest low-cost producer of AI compute. So they might actually benefit from being in a commodity market. This would be the counter-argument to the fourth weakness. Okay, the fifth weakness is AGI democratizes chip design. And so this was actually sent by a Finxter reader on my recent bullish video on Nvidia. He said, okay, so you are not actually believing in AGI because AGI will make chip production much more accessible to the masses, right? So everybody will be competitor with Nvidia. So AGI, even though Nvidia bets on AI, you can see most of the revenue comes from AI, this data center revenue. Here, this part, most of it comes from AI. So they are a massive bet on AI, but the argument is that it might be a Trojan horse because AI actually manifests and we reach AGI AGI will now generate AI chips or design better AI chips to democratize the AI chip market and break Nvidia's monopoly. And as a monopoly breaks, the margin would reduce, obviously. So this might be a weakness, might be a vulnerability. And like, it is true that AI is used in chip design. I did some research. You can find papers by Nvidia. Ironically, Nvidia published some papers like Chip Nemo, very recent paper. I think maybe a couple of weeks old or so. LLM assisted chip design, already ongoing research. Yeah. So you see, you have pre-training. You use foundational models like Llama 2 or even Llama 3 now, and so now these models are already done. Now you throw those models in a specific domain-specific data set, right? And you get out a foundational model that is trained on chip design foundational model. And now you can use this one to maybe create a chat model or so to help your organization or researchers in your organization in a challenging problem designing more efficient chips. And I also, like, when I was a researcher, I was focusing on partitioning problems, and partitioning problems are really hard. So you have, for example, hypergraph partitioning. You don't need to do to understand, but this problem of partitioning is relevant for AI chip design as well, because you need to partition the different areas of the chip because the chip consists of many different computational units. So a single chip consists of many of those computational units, and you can model it as a graph. Then you need to do the partitioning. So you need good partitioning algorithms to actually find the best partitioning. And it's a very hard problem. It's an NP complete problem, we say. NP hard problem, the partitioning problem. And that's why we rely on heuristic algorithms. And NVIDIA has also published some papers that use those more efficient algorithms to create more efficient chips or chip designs that they can then produce or send to TSMC and other chip producing companies. So they need the algorithmic improvements. And now we have already seen recently that AI is actually designing more efficient sorting algorithms as well. So you see, in all these areas in computer science, we are using AI now to create more efficient research. We are using them even in research. We are using AI to create new algorithms, and we integrate those new algorithms in the old infrastructure to make everything that builds on those algorithms more efficient. So obviously AI is already integrated in research, and it's just continue to do so. And I think NVIDIA might be a beneficiary of this trend more than victim. Good. Next weakness, we have exploding unit sales. On the one hand, right, we want more and more chips. Why? Because of the AI scaling laws. You see it at the top, right? You don't completely understand it, but you can see the transformers, the blue line. It keeps reducing the loss on the y-axis as we throw more parameters to the model. And so which means the models and the data and the compute gets bigger and bigger and bigger. Why? Because the performance keeps improving. So we are not converged yet. The AI space has not yet converged, which means we can have multiple orders of magnitude more data, more parameters in our models, and the performance keeps improving. So to say, the IQ of our models keeps improving. There's not an upper bound of IQ or so that can be accomplished with AI. And because of this, we will see exploding AI training demand. We will see more unit sales almost surely. The only question is, or the weakness is, we also see reduced AI training costs. We have seen this figure at the bottom already, that the more units we produce, the lower the cost per unit, and also the lower the profit per unit, obviously, which means that there are two opposing forces, right? We produce more units, but we have less profit per unit. on an absolute scale. And also on a relative scale, the margins will certainly fall because of the competition and everything. So the question is, can the increase of AI training demand overcompensate decreasing revenue per unit sold? Nobody can answer this question surely, which makes it a weakness, right? Because the answer could be no. And if it doesn't overcompensate, the margins would fall, and it would be bad for Nvidia, basically. And my personal opinion is that, like, reducing the price of a computational unit by half would quadruple demand or more. So I think the additional demand will overcompensate for the reduced unit profit. In this case, this would be very bullish for companies like Nvidia. Okay, next weakness, money will be captured by AI applications and not the infrastructure layer. So what does it mean? We have seen in the internet, so here we have an internet example. We have Cisco, here on the right Cisco, and on the left we have AT&T. And these are the biggest infrastructure layers of the internet, right? They produce the routers and the base level infrastructure, the ISP, the internet service provider. They basically host the internet. The whole internet runs on the hardware of those infrastructure companies. But you see the market cap of those companies is pretty small because the revenue they extract from the internet, even though the internet is such a disruptive and revolutionary and impactful invention or technology, even though the ones controlling its infrastructure or selling the infrastructure, monetizing the infrastructure directly, the market cap of those is pretty small. And as opposed to the applications that run on top of this infrastructure, Google couldn't work without the infrastructure provided by AT&T and so on, right? So they need the infrastructure, whereas the infrastructure itself, it doesn't necessarily need Google specifically, right? So there's you could say AT&T is more powerful than Google, but it is the other way around. Google has a much higher market cap because it's the application. In the internet, we have seen that the applications basically extract all the profits, Google, Microsoft, and also the market cap. And the infrastructure layers basically get almost nothing in comparison. And we might see the same in the AI market. Just the Nvidia seems to be the safest bet. Nobody knows exactly what will be the AI applications be in the future. That's why maybe many people bet on Nvidia, on the infrastructure. It's like in the internet days, people see the potential of the internet, don't completely understand all the applications that will be built on the internet. That's why they buy Cisco. This might lead to an overhyping of the infrastructure layer compared to the application layer that might extract all the profits in the end. And you can, two applications would be self-driving vehicles. It's maybe the biggest application. The logistics sector is one of the biggest sectors in the world, and its costs is mainly paying for human drivers. And if you have autonomous vehicles, we actually can save all those costs. We can save all the human brain power, all the human beings driving cars from A to B. And this can be completely automated, which would yield a huge unlock in human intelligence collectively and also in productivity. And so there are real applications, and some companies that solve autonomous vehicle, like Tesla, might get all the profits. But then on the other hand, we have Nvidia also striving to become an application provider. So they focus not only on chip design, but also providing platforms for those application companies, like the robotics companies. They provide this crude foundational model for humanoid robots, for example. And there are already 8 different companies building their humanoid robots on top of this shared platform layer to train humanoid robots, so that you as a startup, as a humanoid robot startup, need to do all the heavy lifting yourself, like training your robots, get the foundational models for for robot training, but you can simply use NVIDIA's foundational model and they keep retraining. Because they have access to the chips, they try to expand their circle of influence to the platform layer and become more a software company, more an application-based company, in order to prevent what happened to Cisco in the early internet days. I think NVIDIA, like this, would debunk the myth as well. They already see this threat and they proactively react to this threat. Yeah, here just for repetition, we have the different market segments of NVIDIA revenue. Gaming would be more like the gaming layer, visualization, virtualization layer, automotive layer, the robotics layer we found. They already have some application layers as well. Currently, most of the revenue basically comes from selling data centers or hardware-based business. This might be commoditized, but as this gets commoditized, the application layers will explode, and this might overcompensate for the reduced profit margins. I think so. This is often named as a weakness. There might be new computing infrastructures like quantum computing. Yeah, I mean, could happen, but you cannot really value companies by just assuming some crazy inventions that would make, like this would be true for every company, right? For every company, you could just invent your own new magic technology that would make the current company unnecessary, right? This could happen for any company. And actually you see that NVIDIA is already like working or partnering with companies researching quantum computing. And if this will happen, I'm pretty sure that NVIDIA would just adapt. They have shown like 20 years of adaptation. So I think they would just adapt with the new computing infrastructure that might be invented. Finally, I think this is one of the most immediate threats of NVIDIA, is simply a regression towards the mean. We have seen, like if you look at the blue bars, this is the revenue of NVIDIA, and you have seen like how it nicely grew, but now in 2024 we have seen a breakout year already, right? This was a breakout year in terms of revenue, and they might be able to sustain this kind of 1 or 2 years. And if you do like a mean, running mean, or like an averaging over time, a time-weighted average line, you might get something like the yellow line, which is actually pretty bullish. It means that actually AI compute will be big. Basically, AI will be huge, and the revenues will keep improving, and NVIDIA does everything right. But even so, there might be some regression towards the mean, towards the yellow line, just in the following year. Because of this statistical effect of regression towards the mean. Often, if we have a breakout, we are only talking about NVIDIA because of this breakout, right? Many of us have not talked about NVIDIA for years, like we did at Finxter. Many of us have just discovered it as because of the breakout year, and chances are that if there was another company with a breakout year, we would talk about this other company. So there would be the statistical fallacy that we only talk about the company that has an arbitrary or random breakout, and in this case we would likely see a regression towards the mean, towards this, say, yellow trend in the next year. And I think this could be it. I mean, we might see a drop in stock price for some time to a more healthy level, and then in the long term it would be irrelevant, right? Because the yellow line just grows significantly from here. We are just in the beginning of the AI revolution. I think this might be the most important, most relevant short-term threat to NVIDIA investors. Or you could call it weakness. It's not really a weakness of NVIDIA, the company. It's just a weakness of market and psychology. Good. Thanks for listening to this video. I'm really grateful to have had your attention. Your attention is the most valuable thing you could have given me and us at Finxter. If you want to keep giving us our attention because you think it's valuable and you get some value out of it, you stay on the right side of change, then check out the Finxter newsletter. Just go to finxter.com, subscribe to the newsletter. I send out an email at least once per week, often more times per week, as I discover new interesting topics for myself. I just share them with the community so that people could also benefit potentially. Also check out the Finxter Academy. Just go to academy.finxter.com or search Google Finxter Academy or search Perplexity AI Finxter Academy, whatever you want, and check out our beginner-friendly AI courses if you want to be really on the right side of change, if you want to benefit from the explosive opportunities given to us by AI. For example, the last course is building complex multi-agent teams and systems with LangGraph. It sounds complex, but it's such exciting course topic, right? You don't have a single agent. You can build multi-agent. You can orchestrate multi-agent systems, like a company of 1,000 workers built only on AI agents. This is like very inspirational, I think. And you will learn how to do this in the latest course. We will soon launch a new course on the Academy. All those courses will be free for all Finxter Premium member or all Katana or Sitesa members on the Finxter YouTube channel. So tech Katana level or above. You will get full Academy access as well. You can do it on YouTube. You can do it via the link in the description below on the academy.finxter.com. And you will get access to all certificates and courses on the Academy, also all future courses, so you can check it out. You can stay on the right side of change. And currently we are working on a course about Hugging Face, how to use Hugging Face. I think it's really relevant, really important for all AI developers. Okay, thanks for watching this video and see you in the next video. And yeah, the next video might be just this if you haven't watched it, the 10 modes of NVIDIA. This is about the competitive advantages of NVIDIA, not focusing on the weaknesses, but focusing on the strength. Some references. Okay, bye.